Hey everybody, just wanted to make a quick video. So I'm going to start by just looking at the S&P 500 heat map, and this was just for today. So you can see there's a lot of blood red everywhere, especially here in the consumer cyclicals, the auto manufacturers, communication, technology. Now, where do we actually see pockets of green? Well, we see green in energy, obviously. Uh, we see agriculture, slightly green. See basic materials, gold. And this little pocket of healthcare right at J&J. And basically, defense, Lockheed Martin. So basically everything is looking very red. And I'm just going to go right to the charts here. So S&P 500. So my worst case scenario, which I laid out in yesterday's video, I kind of made this emergency video yesterday because I saw the futures were really down. And I saw oil and metals and things of that nature just skyrocket in the futures market. So that kind of led me to believe that maybe we could hit the bottom of this trend channel today, which we basically did. We actually shot a little bit underneath it. So when I'm looking at this, this might not be the best time to go grab a put. I mean, if you grab a put here at the bottom of this trend channel, you could get in trouble. So I just want to make that known here. So if for whatever reason, let's say we have some bullish news, and trust me, the market is looking for any sort of bullish news to get some sort of rally that bears are probably going to short anyways. So let's look at what a rally would look like. So if we do rally, I'd still think that 437 area could be a potential rally. I mean, we could have a crazy day like this one right here if we do have some good news in whatever it's going to be. I mean, basically the market will take what it can get. So right here we're at around 419.43. Now, one thing that I don't like about this price action is I'm going to zoom out for you guys. We broke this January low. So if you look at this January low wick, this was 420.76, and we closed below that. So this market is looking more and more weak as time goes by, and I'm looking at the next support here, and it's looking to be around this 413 area. Let me just zoom out to make sure that's true. So let's see how significant this support is. So yeah, this 413 area doesn't look like very strong support. I guess it's right around, yeah, like 413.51. What looks like a stronger support to me is this 410 area, like right around 410, 46, if we're counting change here. So, oh, that just so happens to be this low that we made here in February. So when we opened on February one day, we seriously came tumbling down, and you could see that 410.64 was a low. So it's very likely that we could actually just do a complete inverse parabola here and just go straight down to 410 if we continue seeing a strong selling. But I also do want to note that on this pretty heavy down day, we're almost down 3%. So in my previous video, I said it's unlikely to see like 3% down days. And when you do see that, you're generally getting into like an area where you might get like a quick crash or like a hard correction and then stocks reverse. So you start seeing these percentage days where you see like larger fluctuations, like 3, 4, 5% down, or like 6% up one day and then 7% down the next. And that's because volatility is going up. So the range of us going up or down is increasing significantly. So going back to that volume, you can see here that we had 135 million share volume traded, and the average is around 110 million. So a little bit more than average, but in my opinion, not a crazy day. I mean, crazy days are when you see like 200 million shares being traded or like 180 million shares, you know? So 135 isn't crazy for me. I start saying over 150 on selling volume is when maybe you should be a little bit more worried. But as things stand right now, we're not selling on crazy high volume. So there's a chance we could rebound from this area. I mean, like I said, I think today's sell off was definitely pretty strong, 3% down. And we even had a down day the day prior. So on Friday, I mean, let me even pull out the Bollinger Bands. So when I pull out the Bollinger Bands, I look on the yearly. We basically, we're basically near the bottom of this Bollinger Band, which is 418.93. And when we go under this, I mean, that's pretty oversold. So you can see that when we did go over this here in February, we immediately snapped back because that was serious oversold conditions. So it's very likely that we could even go down to 410. You know, I'm not taking that possibility out. I mean, that could very likely happen. But I do think if we do go down there, we should have some sort of relief rally that could possibly take us back into this trend channel. So I think any movement underneath this trend channel will be short lived. So whether we tank or whether we rally, I think it'll be short lived. And we're going to move within this channel for maybe possibly until the end of the month until we see some sort of reversal. So going back, I mean, this is what I've been pointing out for a while is that we have this whole movement right here. We have this head, and then we could be building out a shoulder, the right shoulder, that could go all the way down to this low 400 area, and then it could do this gap fill right here, and then that could be potentially our bottom. Now, if that's not our bottom, then we have a lot more risk that we need to think about. I mean, we could go all the way down to 451, dare I say, and that could be our bottom. So, in the short term, if the news is nasty enough, we could go all the way down to this 450, and that would basically induce a crash. Or we could have a heavy correction and we could stop right around here in the low 400s. So pick your poison. Either you get a correction or you get a crash. So this area right around the low 400s, it's going to be key because if we lose this area, as you can see, there's virtually very, very little to no support here. This will just cut through like a knife, um, just like a knife in butter. So 352 if we see a crash. If it's just a heavy correction, then yeah, like 403. So definitely, I will be buying around these low 400 levels because at these low 400 levels, SPY will basically be in high correction territory. It'll be like over 15% from the top. So let's just calculate that. So just going to throw up the calculator here. Now 480 was our top. So let's see what 15% is. So 15% from the top is SPY at 408. So if we go down to this 403 level, that would be a little bit more than 16%. So if you're buying SPY 16% from the top, that's a really good deal, you guys. I definitely suggest you start buying in these low 400s when we're around that like 13 to 16% correction range. Because if we do crash, you know, these crashes are usually fast and they're short lived, and people buy the dip so fast. I mean, it could go from a crash and a rebound 3% in a matter of minutes, in like an hour, maybe even faster. So just keep that in mind that from completely from top to bottom, you're not going to catch the top, and you're most likely not going to be catching the bottom. So if you're getting something in between, then that's just as good. Because in the longer run, if you think if you're bullish on America in the long term, then yeah, the S&P 500 should give you returns. And if you're not, then yeah, you probably shouldn't be buying. So let's look at something else here. Let's look at Apple. So to me, Apple this morning was definitely suspicious. I was picking up puts when I saw us running up this morning because, I just didn't see the reason why we would run up on Apple. I mean, I know there's this Apple product news, but I've seen enough Apple product news to know that usually after their new product launch, the stock sells off. So you see this run up, and this is probably like the only reason why it's been holding up because of this Apple product news or whatever. So, now you see the true colors. You see Apple just seriously fading. So this gap up was definitely something you should have shorted. And you even had a second opportunity right here when Apple came back to 164. So, that sharp sell off should have been your signal. Hey, maybe I should get some shorts this time around and hedge myself. So let's just take a look at this. So if you guys remember, I had this 5-day trend that I was showing you guys previously. So this is what it looks like when it's extended out. Let me just take out these moving averages so you can see it more clear. So do you guys see this? Do you guys see what I'm seeing? This line tells me when Apple is overbought and it tells me when Apple is oversold. So this whole move right here, this was a shorting opportunity. And as you can see, we're right back to below this trend line. So, is it time to be buying Apple? Well, maybe, but maybe not. I mean, I would probably hold off just because, I'm not too bullish. I would most likely be looking to play the other side, where if we do rally, then, I will be shorting it. So I personally will be looking for opportunities to short Apple, but I don't suggest you do this if you don't really know what you're doing with options because the volatility is high. So you could get shaken out easily if you're not convinced on your play, and you could quickly lose confidence and you just lose more money than the money that you're already losing. So definitely be careful with that. Now we're going to zoom out on the 1 year chart, and you can see it's just a downtrend. You can see this massive red bar here that we're building. So if we're to just completely undo this move here on the 24th, which is very likely, I mean, it's pretty likely that we could just undo this entire move right here. We could fall basically all the way to 153 area, 152, 153. So when I zoom out and I see where is the bottom of this trend channel, well, if we're just to hit the bottom of this trend channel right here, that'll be right around this mid 153 area. But we also have some support right here around this 150 area. And then let's introduce the moving averages. So now you see that this the bottom of this trend channel is actually lined up with the 200-day moving average. So now we see that 153 could be quite a support for Apple because this is the 200-day moving average that's basically carrying the market on its back. So if we break through this 200-day moving average level, where is the next support? I would say it's around this 250 area, where the 250 moving average right around 148, but there is the support right in between these two trend lines right around 150. And the other day I was telling Discord members that there's a lot of puts, a lot of put flow for Apple at 150 strike for mid-April. So watch out for that. The bears are basically calling for this 150 support, and who knows what they're going to do once they get there. Now, looking at XLF, this doesn't look too good to me because I was talking about XLF potentially breaking this trend channel the other day, if you actually follow my videos. And now you can see it's very clear. We broke underneath this. So where is the next support? Next support on XLF, which is the financials, is going to be this 35.35. And if we break underneath that, then things don't look too good. Let me just draw out potential areas where we could fall to. I would think that it would just be a straight fall to this 31 area, 3150, because you can see there's not that much support here. So if we break this 3550 area, that might be a good opportunity to pick up some puts. And I'm just saying it might. I mean, obviously, if we fall underneath this, you're going to know where your risk range is. If we go above, well, then, you'll want to set your stop loss slightly above this area. If we go below, well, then you could just write it all the way down to this 3153. So that's just one idea. I mean, don't follow me if you're not convinced. But if you are, then yeah, I mean, like make sure you set your risk. And you can also see these moving averages curl down. 20-day moving average is curling down very hard. It's looking like it's going to want to cross underneath this 200 days soon. So keep an eye out for that. Now, lastly, I want to go over Bitcoin. So if you saw my Bitcoin video yesterday, I was basically calling for us to make a quick trip to this 33 area, this 33, 34 area, 33,000. I just want to make that clear. Bitcoin's definitely not going to $33. So let's just take out the moving averages here. Now you see that we're in this downtrend channel. And you can see every single time we went above it, it was basically a great opportunity to take profits. So now when we zoom out, we see this trend line that's been holding pretty strong. You can see it catches this move, that move. Basically caught the top before we fell. Catches this top, catches this top, catches the double top right here basically. So where could we rally if we rally? Well, it's potentially going to be this 39,000 area. And if we're looking at this other trend line right here, we can maybe even do like a triple top and do like this 45,000 area. So that's the bullish case. Now, the bearish case, which I'm more inclined to believe will happen, is you could see that we actually rejected intraday. We rejected this 39,000 area. Let me show you what that looks like on the day chart. So on the day chart, we were right here. We rejected that. And look what happened. This happened to be that top of that trend line that I was showing you guys earlier. We had this massive sell-off. So over a $1,000 sell-off. It went all the way down to 37,000. Now we're seeing this rebound rally from buyers stepping in, buying the dip right around the support area. So if we break this 37,000 support, it's going right back down to this 33,000, 34,000 area. And if we fall underneath that, well then 29,000, and then that will look like a complete gap fill of this head and shoulders that we're having. So now I want to go into the commodities futures. And if you look at my futures video yesterday, I was talking about how crude, WTI, and Brent was up significantly, but it's actually kind of calmed down a little bit from where the futures were last night. So we'll see. I mean, we'll see tonight if this rallies up again. If it does, well then that just means worse things for the stock market. Means inflation is going to get worse. Basically indicating a recession. I mean, so many bad things happen when you see oil inflate at these nasty prices. So something to look out for. Now, one last thing. I was really contemplating if I wanted to show this, but I think I should. So this is S&P 500, the options flow data. So what I want to point out here is that for the shorter term, for the quadruple witching that's coming up on the 18th, that's when a lot of monthly options expire. Now, we see a lot of puts with strikes right around this 410 area. So we see 409, 412, tons of puts. And the premium that's attached to these puts is, let's see, that's 12, 16, 17, 18, 19, 20 million. So we got about $20 million of premium attached to these puts that are about to expire in about 2 weeks here at the 410-ish strike area. Now, what makes this even more bearish is that they basically just added more puts going out all the way until April 14th, which actually isn't that much. I mean, it's like a month and a week. And now they're calling for 401, 410, 405. And how much premium is attached to this? Well, there's a ton of premium here. I mean, this trumps the March premiums here. So this is let's see, about $38 million in put premium. So I mean, if you're not seeing this, and like you should be bearish. I mean, the chart looks bearish, the macroeconomics looks bearish, the options flow data looks bearish. So I think it's very likely that we just get a quick cut, we're done and over with it, and we see where we go from there. I mean, are we going to crash, or is this just going to be a um, deep correction? So like I told you guys, when we zoom out, I mean, we have the option of being a large correction right around 403, or we have the option of being a crash right around 350. So yeah, pick your poison, and I hope this video was informative to you guys. And yeah, stay safe. Things are getting worse.